All right, I want you to pull up a chair right here next to me. Just imagine you're looking over my shoulder at my desk. On this interactive digital screen in front of us, exam scripts are just constantly, endlessly loading in through the Cambridge portals. Right up there in the corner, you'd see a live counter displaying scripts marked today, and right next to it, a mark verification meter, hovering steadily at about 98%. I'm a senior examiner, and today we are completely pulling back the curtain on AS and A-level accounting, specifically Syllabus 9706. We're going to target what is, quite frankly, the ultimate battleground for students: limited company financial statements. I'm talking about ordinary shares, bonus issues, and rights issues. This specific topic appears in literally every single examination series. It is completely unavoidable, and yet thousands of candidates just hemorrhage marks here every single year. So listen, in this explainer, we are not just going to recite textbook theory. I'm going to show you exactly what I experience while sitting here marking your scripts. I'm going to highlight the exact precise moments your answer either skyrockets into those elite top-tier A-star bands or absolutely plummets into the failing thresholds. So grab your digital grading pen, get comfortable, and let's get to work.
So, here is our game plan for today. We're going to deconstruct this whole marking process piece by piece. First, we'll look at the 15-second structure scan. Second, the core accounting principles. Third, the technical methodology. Fourth, how to earn those vital method marks. Fifth, mastering critical analysis. And lastly, my top examiner warnings. Let's jump right in.
Okay, Section 1, Inside the Examiner's Mind. Let's talk about the 15-second scan.
Okay, let's dive into this, because this is absolutely crucial. When a student's script first lands on my screen, you need to understand that I don't read it like a novel. I scan it. I scan it kind of like an architect looking at a set of blueprints. And the hard truth is, within the first 15 seconds of scanning a response, an examiner already has a highly accurate instinct about whether they are looking at an A-star candidate or a D-grade candidate. Let me introduce you to two archetypical students I see on my screen every single day. Let's call them Alex and Sam. Now, Alex relies entirely on superficial breadth. He essentially panics and dumps massive, unorganized paragraphs of facts onto the page, just listing textbook definitions line by line, hoping something sticks. When I'm reading Alex's script, I am desperately searching for some kind of analysis, but all I find is just basic description. It's frustrating. Contrast that with Sam's approach. Sam uses analytical depth. She structures her logical reasoning to directly hit the command word, and that's the secret. If the prompt says evaluate, you literally must evaluate. You can't just discuss. The academic benchmarks we use strictly prioritize Sam's analytical depth over Alex's superficial breadth. You absolutely have to directly answer the specific command word to unlock the highest tariff of marks.
Moving on to Section 2, Core Accounting Principles. Now, the assessment objectives we use target three very distinct cognitive domains. And to be a successful candidate, you have to demonstrate competence across all three of them. I want you to think of this like climbing a ladder. AO1 is knowledge and understanding. This is your base level, the very first rung. Can you accurately define a rights issue? Okay, great. But AO2 is analysis. This is where you actually do the work. Can you calculate the exact financial impact of that rights issue on the company's equity? And then there's AO3, evaluation. This is the top of the ladder. Can you actually justify whether a rights issue was a better strategic decision than a bonus issue, using the specific data they gave you? If you just sit at AO1, like our friend Alex, just spitting out definitions, you drastically cap your potential score. You have to consciously climb all the way up to AO3 if you want to reach those elite top-tier marking bands.
And that brings us to this, which brilliantly illustrates a really high-value insider secret taken directly from the principal examiner reports. The theoretical architecture of this entire topic rests on precise definitions, causal relationships, and, this is the big one, integration with other syllabus areas. Listen, when I see a candidate seamlessly connect, say, a bonus issue to its impact on a company's liquidity ratios, which is from an entirely different syllabus topic, my digital grading pen just starts flying. I love to see it. Making those cross-topic connections signals to the marking desk that you aren't just memorizing isolated flashcards. It shows us you deeply understand the entire financial ecosystem of the limited company. And I'm telling you, that is exactly how you score big.
All right, Section 3, the technical methodology and the procedural framework.
When it comes to data interpretation and the systematic processing of financial statements, your approach literally cannot be random. It requires a rigid procedural framework. Problem solving in these scenarios relies on a mandatory 5-step deconstruct, solve, and evaluate framework. Let's walk through it. Step 1, identify the given information. You need to extract the key elements from texts and tables right away. Step 2, Break it into logical steps. Figure out which relevant principles apply here. Step 3. Solve systematically. Execute your analysis with crystal clear working. Step 4. Check for reasonableness. Does this number even make sense in the real world? And Step 5. Make justified recommendations. Imagine Alex and Sam actively debating how to write a model response right now. Alex, as usual, insists on just listing definitions for safety, but Sam correctly argues that without an evaluative thesis link, the examiner is going to heavily penalize their script for a lack of critical depth. If you ever hit a logical roadblock mid-argument, like where your evidence just stops supporting your conclusion, you need to deploy a structure like PEAL. Point, evidence, explanation, link. It's a lifesaver. It flawlessly reconnects your argument string. Following this mandatory 5-step sequence guarantees a structured, method-driven response that examiners absolutely love to mark.
Let's move to Section 4, Earning Vital Method Marks, and why you must always show your working. Now, what's really interesting about this strategy is that it introduces a critical lifeline for candidates. This is the method mark strategy, and it relates directly to your mark per minute velocity in the exam room. I literally cannot overstate this. You must show your working. Let's say your final answer for the retained earnings balance was completely wrong, just totally off. Why? Because you punched a single wrong digit into your calculator under the stress of the exam clock. Well, method marks can actually save you. As examiners, we award marks for the correct process and clear working out. So, when I'm reviewing your script, if I can trace your logical steps, if I can physically see on the page that you understood the accounting treatment of an ordinary share dividend, I can still award you the vast majority of the marks for that question, even with the final arithmetic error. But if you just write down the wrong final number with no working, I give you a 0. Showing your step-by-step working is an absolute non-negotiable.
Let's do a quick live marking audit together. Just you and me. Imagine I hand you the digital grading pen right now. Your challenge is to spot the penalty. If I display an authentic but flawed sample student paragraph on the screen, where do they forfeit 5 critical marks? I'll tell you. They lose them right here, on these strict presentation conventions. Presenting financial information follows rigid, uncompromising rules. If you lack proper headings, if you use colloquial, everyday language instead of the correct, strict accounting terminology, if you ignore the appropriate formats for a statement of changes in equity, or if you fail to provide clear annotations, you are going to immediately trigger a penalty. These conventions aren't just for show. They signal professional, practical application. Respecting them is what unlocks those vital marks.
Okay, Section 5, Mastering Critical Analysis and Evaluative Thinking.
So, the crucial takeaway here is this. The higher-order assessment objectives demand that you don't just act like a calculator. You need to act like an advisor. Top-scoring candidates demonstrate true evaluative thinking by questioning assumptions, considering different perspectives, and, most importantly, justifying their decisions with rock-solid evidence. Let's say you're given a 30-second data scan challenge in the exam, say a really complex Cambridge source chart or a dense data matrix, and you've got a visual countdown ticking away in your head. Your job is to extract the single highest-yielding trend. You have to ask yourself, does a rights issue dilute current control? Is a bonus issue simply a capitalization of reserves with absolutely no real cash inflow? You must compare these approaches and make justified recommendations based purely on the specific data matrix provided in that exam paper. That strict evidence-based reasoning, that is exactly what separates the top-tier candidates from everyone else.
And finally, Section 6, Top Examiner Warnings. Let's look at the exact traps you need to avoid. From my desk, reading literally thousands of scripts, series after series, year after year, I have extracted the top 3 disastrous mistakes directly from the Cambridge Principal Examiner reports. These are the 3 fatal traps that students just blindly walk right into when dealing with limited company financial statements. Here they are, fully deconstructed for you. Trap number 1, forgetting to include the proper format. It breaks my heart, but students lose incredibly easy marks by simply formatting a ledger account or a financial statement incorrectly. Trap number 2, failing to check your format and presentation before moving on. Look, I get it. In the adrenaline rush of the exam room, candidates just don't verify their results or their layouts. They leave these sloppy, hard-to-read answers that completely hide their underlying knowledge. Don't do it. Take a breath and check your work. And trap number 3. This is perhaps the most fatal error of all. Providing answers that are not specific to the given context. If a question specifically asks you about the impact of a bonus issue on a named manufacturing company that the prompt says is struggling with liquidity, and you just write a generic, textbook definition of a bonus issue without ever referencing that specific company's cash flow problems, you will fail that question. Context is absolutely everything.
I want to leave you with this final, somewhat provocative thought as we wrap up our grading log for the day. Look at this question on the screen. If method marks can save a completely wrong calculation, are you sacrificing guaranteed points by hiding your analytical process? Because every single time you skip a step on the page, or every time you fail to annotate your logic, you are literally tying the examiner's hands. We genuinely want to give you the marks, but you have to show us the path you took to get there. I want you to rethink your entire exam strategy for your next paper. I want you to focus on the 15-second structure scan. I want you to adhere strictly to the method mark strategy by showing your clear, step-by-step working, and always perform a final quality review pass for formatting. Keep practicing those past papers, and I'll see you back at the marking desk next time.